Thursday, October 23rd, market analysis, Stan Ehrlich. I start out with stock indexes, go to futures markets and some stocks, and I always have commentary in the beginning, which is I still think these markets indexes are in the process of topping out and are going to break below the October lows a couple of weeks ago, creating a further downdraft, so to speak. And maybe we're going to have the October lows in October this year. It is beginning to look a little like November as opposed to October. That would be maybe the second or third time that would happen in the last 30 years. So I'm still hoping for October, but the more important commentary is these indexes are not making new highs. If it does make a new high and it closes above previous rally highs during the month of October, that's when they have happened, then I'm probably going to have to turn bullish and claim that October 10th was the October lows, which satisfies the criteria, but in a very mild, unexpectedly modest way. But it's still the lowest low for several weeks, previous month, just not very much of a break. But that's the way it might have happened. Time will always tell. We're going to look now at the 5-minute chart for the MES or the micro E-mini. As you can see, it's having a little trouble today around where it did the last couple of days, and it's not quite a new high ground. And here is the SPY daily data chart. Last few days, same price levels. The highs are clustered close together, resistance. But if it can break it, which it could, it might, I don't think so, then it'll turn bullish. Here's the 5-minute chart on the SPY. Now the QQQ is very similar. It came extremely close to the high of the move on October 10th, which is my bearish engulfing ER sell signal. And I told you that, well, actually, that day I had to leave early. I was gone for a few days, so I was only in the office for an hour or so in the morning. And at that point, I don't know that the bearish engulfing had happened. I don't think so. I think it was a little bit while later, 30 minutes or something. Nevertheless, sell signal on top. That's what I love. That's what I've written this code for. Came up with these ideas over, well, it's been 53 years now. Next, August, QQQ, same story. Of course, it's the 5-minute chart for what I just showed you on the daily. MNQ is obviously the miniature of the QQQ. Same story, although remember the QQQ only trades from 6:30 California time to 1 o'clock, while this contract trades 23 hours a day. So lots of things can happen in the late afternoon, all night, before the opening the next morning to cause those markets that are open at the time to move up or down, sometimes dramatically. Therefore, sometimes causing big up or down gaps on the regular session, old-fashioned, if you will, contracts like the QQQ, the SPY, that kind of thing. And the MNQ 5-minute chart, all of them are having trouble right around where they have topped out before. That spells potential double tops. YM daily data chart's one of the best examples. It only came up, I think it was 11 or 10, maybe 11 or 12 ticks into new high ground a couple of days ago, and then came right back down, slipped yesterday, and didn't do too much today, a little bit higher. And there's your 5-minute data chart. Russell, not the same animal, stopped at the top of this resistance area that I've had on these charts for years and stalled out, hit a little low, came back, couldn't do anything about new highs, and slipped off a little bit. But this is kind of like a pennant for the last 2.5 weeks, which means soon, and I think it's going to be down, of course, we're going to close below this bull trend line and stay below the bottom of this upper slanting channel, which is a very thin wedge, you might call it, or pennant. Okay. And the 5-minute chart for the Russell. Now, bonds. Bumped against resistance area yesterday. Overbought conditions started to come down dramatically today. Perfect. Exactly what I was expecting and said so yesterday. 10-year notes, same thing, basically, very similar. It also has a major resistance area from a month ago that it's having trouble with, and it was overbought at the same time several days ago and it's turned down. This is the lowest close since the test of upside resistance above the market. Next, we've got stuff developing in energies and the grain complex that's pretty interesting. Two very sharp up days on crude. First day yesterday stopped at the bottom of a resistance area. Today, although it got through it a little bit, the top of the resistance area, the more important area, in fact, we closed at that resistance level. A little bit higher or more than a little bit could be a breakout to the upside, and then we're going to go up to 65.90 or even higher. Now it got overbought today. Well, no, it didn't. I'm sorry. That yellow is because of the yellow sideways zone, not the body. It just happens to be the same size. So not overbought. Could get stronger. Watch out. Crude could go up a little bit more. We're banging against resistance very accurately in natural gas and turned down today. There is a gap to close a little bit lower. I don't think there's any gaps in crude oil. No, there isn't. So I'm expecting it to come down, close the gap, and frankly, to go into new low ground completely. Please remember my minimum downside objective I've been talking about before June is still in effect, and that would be 1.5 approximately. What about heating oil? Up against resistance and overbought today. Couldn't make it through. It did a little bit, but closed below that resistance line. That oftentimes tells you it's going to come back down to the low area of the pattern. That's exactly what I think. We still got a major bearish engulfing signal on gold at almost the top of the market. Unfortunately, the next day it did make a higher high by a slight few ticks and then crashed. And we're going sideways a couple of days. I am looking for a move down, very frankly, to about 36.02, maybe even lower. Pretty big break. Silver had a bearish engulfing on the exact high day, popped back up a little bit earlier this week, crashed, came back yesterday and a little bit today. Still looking for lower levels. Frankly, probably down to at least 40.40 and very possibly a little lower than that, maybe 37. Bearish engulfing 2 days ago in platinum after getting overbought and topping out for no particular great reason. I didn't see that except for overbought. But this also puts a little icing on the cake. So I don't mind this 2-day rally as long as it doesn't get above Tuesday's high. Today's Thursday. So I'm looking for a lower and a close lower than yesterday's low very soon. Although, frankly, that's starting to get into some support. So maybe this won't fall apart, but come down into this range of 1470, 1360. Copper, a little bit more strength. Bearish engulfing did not work at all. Got stopped out or offset or canceled on Monday. Yeah. So a little more strength is possible. I'm not very confident about the copper opinion at the moment. I'm going to hang on this for a bit. Next, grain complex. It is coming up okay. But today's the first day of being overbought in soybeans and almost a test of the resistance area. The real important level is to close above 1080.81. Then we're probably going to have an easy situation getting above 1093. If we can do that, we've got new highs since February. Long-term bottom potentials. Major long-term bottom potentials. Next, we're stopping at a bear trend line on a downward sliding channel in soybean oil, having a little trouble getting through it convincingly. Our close today might very well be a tiny bit above it, but that really didn't count much. I need a close above the recent high here, 5170-ish. That's going to be a definite breakout of the trend line and a new high close for a little over a month. I'm bullish, looking for higher levels and generally speaking, grain. Here we go with soybean meal. overbought now 4 days in a row, new highs every single day. I think it's going to hit the resistance level at 298, stall out, have a correction, and then we'll see if it can make new highs for quite a long time period. So I'm looking for a little more strength and then turn down for a modest correction, but I'm turning bullish slowly but surely. Corn is the same story here. We're almost a new high ground for a couple, 3 months. Not quite, and we're not quite overbought either. So we have a good chance of breaking this little line. Now, I want to talk for the first time about a pattern I really don't think is a very good example of. That is a head and shoulder bottom. I think there's a chance the low that was made on July 14th is the first shoulder low. We've got the head of the formation as the lowest low always on August 12th, but we did have a bullish engulfing buy signal on August 14th, which is really the beginning of this strong rally. So we almost got the bottom. This combined two different lows are further to the right in time than one would normally expect. That's what the problem is with the pattern. But they're not too low in price. There's also a double here, and usually there would be a double low on the left also, but there isn't. So it's timing and the double that bothers me a little. But here's the neckline, and we are right underneath it, immediately underneath it. So crossing that line would probably make new highs for the trend, and whether it's a head and shoulder bottom or not, that's still an upside breakout of some significance. Next is wheat, and it's just starting. Finally, some decent bullish price action, but we've got a resistance level just above, of course, after years of bear trend. So we need to get up to it, into it, and above it. Next, we've got a few stocks. Apple has a gap to close. I talked about it when the gap occurred on Monday. Almost closed a little tiny bit of it yesterday. Came back with a doji today. Inside day is uncertainty. Doesn't mean too much one way or the other. Looking for the gap to get closed, but actually, I don't think that's going to stop it. I think it's going to come down to at least 241-ish and close that old gap over here and maybe even a chunk lower. We've got a large trading range today, but it is a bullish engulfing. The implication on Tesla with this bullish engulfing today is higher prices. I'm skeptical. I'm still looking at the overall indexes, pulling most everything, of course, because it's an index, or they are indexes, down. So I'm not sure about this. So I'm going to wait one more day before I speak up. Normally, a bullish engulfing is bullish, but I'm being overpowered, so to speak, by my bearish expectation in the overall indexes, which I think is going to pull Tesla down with it. Now we've also got NVIDIA, another doji, top of the market, bearish engulfing, ER sell signal, perfect. I'm looking for lower levels, support at 171, probably down to 164. And I also cannot rule out by any stretch of the imagination 152.90 or 153. So I'm looking for a fairly decent breakout to the downside here in NVIDIA. And we've got fairly new last couple of weeks, AMD, and it's just simply overbought like crazy because of some fundamental announcement about a chip they were going to make that's going to make a lot of money. Faster, smaller, cooler, cheaper, et cetera, cuter, whatever. But I do think the news is in the market and it's overbought. And I didn't even expect it to roll up a little bit more here lately from the high of the rally initially at 226 up to 43. So another bit. But that's not all that much considering it's a $220, $30, $40 stock. Another $13, taking weeks to do it. Next, MES again. You guys have a great day and profitable trading to you.